started trading when I was 15 years old. Over the past 3 years, I've tried almost every complex strategy that exists out there. It took me more than 2.5 years to finally become profitable. And during that time, I lost hundreds of euros. But in the process, I learned one crucial thing. Profitable trading is boring. Today, I trade less than 30 minutes a day using the same systematic approach. And I've been constantly profitable for the last 4 months. My goal with this channel is to show you what real, honest, profitable trading looks like in the early stages. And before you think, yeah sure, just another trading guru with fake screenshots, take a look at this. These are my officially passed FTMO challenges. Everything is fully transparent and every single trade has been documented. In this video, I'll show you why you don't need fancy indicators, why you don't need to sit in front of the charts for hours, and why trading doesn't have to be overly complicated to change your life. We'll go through everything I've learned over the last couple of years, lessons that cost me hundreds of hours and euros. I'll show you the profitable trading strategy that I use, something anyone can learn. And by the end of this video, you'll understand why systematic, boring trading will always outperform emotional gambling. But this wasn't always like this. When I first started with trading, I behaved like most traders. I was constantly chasing excitement, adrenaline, and the feeling of being in a trade. There will be days or even weeks where you don't place any trades. You simply watch the market and do absolutely nothing. And that is exactly what separates the top 1% of traders from anyone else. Back when I was still an unprofitable trader, I would come home from school and have this strong urge to place a trade. Though of course I ended up making a bunch of stupid trades. I just wanted action. I was addicted to the dopamine that trading gave me. And the reason for that was simple. I treated trading like entertainment and not like business. And honestly, that is exactly the problem most traders still have. Many people think that trading is about predicting what the market is going to do next. But the reality is very different. 99% of traders fail because they can't control their emotions and they don't have a clear defined system, and not because they lack some kind of secret strategy. So let me show you the foundation of my approach. Think of it like a building block system that removes emotions from your trading decisions and makes you more consistent and profitable. There are 3 key principles to my strategy. Principle number 1, higher time frame context. I only take trades when I know where price is located on the higher time frame, especially on the monthly time frame. The reason for that is I want to know whether price is currently closer to buyers or sellers. This is extremely important because I do not want to sell in institutional demand and go long in strong supply. Principle number 2, understanding the current trend. We need to know whether the market is an uptrend, downtrend or ranging market. Knowing the current market phase is essential because it determines which kind of trades make sense and how much risk to reward we can realistically aim for. For example, in an uptrend, we can enter the trend and ride with the trend, extracting much larger profits. In contrast, in a ranging market, price usually tends to accumulate in a range, meaning we take shorter, smaller trades. I'll show you exactly how we determine the trend in a moment. But before that, we need to talk about the next. Principle number 3, identifying relevant supply and demand zones. Now, we focus on finding our entry point. For many traders, this is the most difficult part because there can be many zones. For example, if you look at a chart on a daily time frame, you will see several supply and demand zones. Which zones should we choose? To solve this problem, I use clear and defined rules that help me determine which zones are stronger than others. These include: is the zone fresh and untouched? How strong was the move away from the zone? Did it break any previous highs or lows? How long did price spend inside a zone before moving away? How much risk to reward this trade can realistically offer? Without proper risk management, nothing works. I don't guess my position sizes. I usually risk 0.5 to 1% of my account and aim for at least a 3-to-1 risk to reward ratio, so that you can see how these principles actually work in practice, and now show you real trades from my performance over the last 4 months. So now we are going to look into the trades that we took, and the first one is going to be SRK-TRADES. And as always, we start by analyzing the monthly time frame first. Here we are trying to set up the ranges, meaning the institutional demand and supply, and let's do it. So we have SRK-TRADES in front of us, and how do we analyze it? How do we draw supply and demand zones in the right order? It is actually pretty simple. We start with the current price, and in order to draw demand zones, we simply just go to the left and down. And look what we found: a rally, base, 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 followed with a strong rally. I like to draw my zones by using this shape with the rectangle. I'm gonna show you how I do it. I simply start by clicking on the rectangle, and after that I click on the top of the body of the base candles. We drag this down to the bottom of the wick of the base candles. Here we have our demand zone. For supply we do the same process, just reversed. So we go to current price, we go to the top and to the left, and we have a rally, base, base, drop formation. Just like our demand zones, we draw our supply zones by the bottom of the body to the top of the wick. We now continue by filling out the empty space. We just simply fill out the space like this. And now what I can see on the chart is that we currently are in the middle of the range. Let's move to our weekly time frame. Here on the weekly, as spoken about previously, we determine our trend. So before we move to the candles, I'd like to show you how we actually draw our trend. And it is actually kind of simple. In order to have an uptrend, we only need to have 3 directional segments. The first directional segment that we need to establish is a higher high. Then we need a pullback. And an important thing is that the pullback can't close below our current higher high. It wouldn't be an uptrend, right? After that we need another higher high, and voila, our uptrend is established. Basically the same goes for establishing a downtrend. We need a lower low followed by a pullback and another lower low. So with this information you now can identify a trend, and my question to you guys is, what do you think? What kind of trend is this? Is it a down, sideways or uptrend? Well, it is very clearly an uptrend because we've established a higher high, breaking through oppositional structure, a pullback and another higher high. So right now we are in the middle of the range. We are in an uptrend. And what kind of zones do we have here on the weekly time frame? Well, in order to identify our demand zone, we need to go to our current price and go down and to the left. And we see here a very clear demand zone. It's a rally based rally followed with a couple of continuation candles. So let's move now to our daily time frame. Now it's our time to determine which zone we should choose. And for that I chose this daily candle split. Why did I choose this candle split? Well, many traders often skip this because they don't see a base candle. But don't be foolish, guys. If you drill down to the lower time frames, we will see that we will have a basing candle right here, going down to the 4-hour charts, and right there we have a great drop base rally. This is a so-called candle split. So right now we are in the middle of the trend, we have an uptrend and we have our zone. The only thing is to set up our target and our stop loss. So initially we placed our stop loss slightly below the zone and our take profit to the current high. And we have a beautiful 1:5 risk to reward ratio. So this trade offers us a very significant, very high risk to reward, which is important, especially when you are trying to pass a challenge. And price comes down, we are entered, and look at it. It was a close call. This candle came all the way down here. It actually opened with a gap, meaning that this was because of the US-Iran conflict. Price gap down, came into our zone, filled it completely. And what were the next steps that we took? How did we manage this trade? First of all, we waited for price to come out of this zone, and it came out beautifully. After we've seen that the trade closed this bullish, We've put our stop loss to break even and let it ride. It was a full take profit. Here's the proof that we took this trade on our challenge. If you guys have trouble identifying supply or demand zones correctly, or you don't know how to identify the trend, leave a comment down below. But for now, thanks for watching and I'll see you in the next one.